Happy Monday. Thanks for checking out this market update. And right now, mortgage bonds are down about 17 basis points to start the week. If we dive into the charts right away, we do see that we continue to test this 25-day moving average as a really strong level of resistance that just has been a line in the sand for quite a while now. And if we flip over to the Treasury side of things, which again is usually the inverse of where mortgage bonds are trading, you do see on the 10-year side that we are testing a new Fibonacci level of resistance. And hopefully, I'd love to see bonds kind of just take a bounce right off that. One of the things that may impact this is today at 1 p.m., we do have a 10-year note auction. I'd love to see some big investor demand from that. We'll wait and see how it goes, but it'd be really nice to see the appetite out there, considering we do have what is anticipated to be a pretty positive CPI report coming tomorrow. And we also have the expectation that on Wednesday, the announcement will be that the Federal Reserve will likely not be hiking at this period and kind of take a break. So I'm really hoping that comes to pass as it's planned. We never know in this market. If you've learned anything from any of this stuff, it's that we just don't know what's going to happen. All we can do is kind of take our best educated guess on the data that we have. But we are set up to have a really good bond-friendly week. So let's hang in there and kind of see how it goes and kind of hope for the best. Another thing I do want to throw out there, if you're looking to purchase a home right now, is the area median income figures that Fannie Mae and Freddie Mac use to determine certain program eligibility have just been revised for the year. And they've moved up, which is fantastic. So what does this mean to you as a home buyer? It means that there are certain programs, Home Ready, Home Possible, just to name a couple, there are programs that have income limits that if you qualify for them, you may get a reduction in your interest rate or certain other loan program options that can benefit you, especially as a first-time home buyer. And the thing is, those limits have actually just been raised up. So if you might not have been eligible for them before, you might now. It's always worth taking a second shot just to kind of take a look. I'm happy to answer any questions you have as far as that. My contact information is in the show notes below. Other than that, you can reach out to me direct or your own chosen loan mortgage provider. But definitely check into that because it could actually save you quite a bit on your interest rate and your pricing. And it's definitely worth keeping an eye on. That's about it for me this week. Like I said, we're set up to have a really good bond-friendly week. I hope it comes to pass that way. Feel free to reach out if you need anything else. Otherwise, see you next week.